It is now day 687 of not wearing pants to work. We're doing it. So obviously we got to talk about what just happened in the market that led to all this dramatic bleeding that we got today. But make sure you still stay tuned to the end of the video where I actually talk about one stock that I think will perform no matter what happens in the market. First, we saw that the Federal Reserve did step in with a 25 basis point hike to rates. Now this was expected. If you were in the Discord, this is what we were saying. We had most anticipated was a 25 basis point increase. Otherwise, I think the Fed would lose credibility. Also, cutting wouldn't actually be good for the banks, which are already struggling. And it came in, it seemed like the market was fine with it. We did see some chop from the algorithms, didn't really seem like they knew which way to make up their mind. And then when Jerome Powell started speaking, the story changed a lot.
With all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
You know, it's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and you know, we're certainly trying to find it.
Really instilled some confidence there with that one, Mr. Powell. Now, I want to be a mansplainer, but what he's essentially saying there is we don't know, and we're waiting to find out. Now, also keep in mind that today we did hear that there was supposed to be one more rate hike after this meeting, so still another one coming up. But the bond market doesn't believe the Fed at all. And in fact, I am inclined to believe bonds right now and say that this was actually probably the last rate hike. The stock market, however, seems to be taking Powell at his word and probably also doesn't like the uncertainty on several of the questions that he was asked, especially when it came to commercial real estate, the state of credit right now. And I think it brings attention to also what's going on with the banks, which makes me want to point out what's going on with KRE. Now, this is your ETF for smaller regional banks. Okay, these are banks that the Fed has said that they will not save. We can see the dramatic sell-off that occurred here after what happened with Silicon Valley Bank. Now, this has been an excellent opportunity for shorts, and lots of Discord members have also been making money off shorting First Republic Bank as well, which I think was excellent. Just be cautious when you're shorting these banks, though, because remember, if they get delisted like Silicon Valley Bank, you're going to have to actually purchase all those shares. And I'm speaking just to option traders right now, right? So if you buy a put and then the stock gets delisted, what's been occurring with a lot of the put holders of Silicon Valley Bank is that they actually had to exercise those puts. And if they have margin accounts, then you have to buy with 2-3x margin to buy the outright shares. Remember, you're buying them at whatever the expiration was for the option, right? And with the profits that you made. So then after you get those, then you can sell it, and that will take weeks, right? So if you have a small account and you're like, well, this contract's $100, just be aware that the actual shares you're going to purchase are going to be much larger than that, and you actually need the funds in your account to complete that transaction, or else you won't get any of that money. I think it's really important because I think we're going to see likely that some of these other banks may collapse in the future, and I don't want you all getting burned on this because you're not aware of how that occurs. If you have any more questions about that, you can always message me in the Discord. I'll be more than happy to help. But getting back on topic with KRE, one of the things that I'm thinking is sort of a rhyme right here with history is back in 2008, 6 months before the actual collapse of the banks there, we did have a buyout because one bank collapsed, and it ended up being the canary in the coal mine. Now, this could be different and not the same scenario. However, due to the fact that most of these banks were following the Fed's recommendation to buy treasuries to cover the debt, remember we've talked about this in the other video. If you're not sure what I'm talking about, go watch my previous video about this. I think that we are likely to see other banks have collapses. Now, it might take some time if we keep these rates persistently high, or if there's any more dramatic changes within the system, or maybe you see that commercial real estate crashes. One of those questions that was asked to Powell today, where he said everything's fine. Just remember, 30 days ago, they said everything was fine with the banks, and look what happened. He's saying everything's fine with commercial real estate mortgages. All these small banks that we said we wouldn't protect that are loaded up, and we do expect a crash in that market. and maybe some defaults. Like we're seeing defaults in the auto market because the Americans don't have a lot in their savings, but they do have a lot on credit while we're tightening, and it's becoming more expensive to have that debt. Yeah, it's probably fine. And so when you really start breaking down those variables, you can kind of understand why Powell's saying, well, we'll see. And here's the other important detail when it comes to calling these small banks. You have to understand what is the definition of a small bank. And that's any of the banks that are in the top 20. Now, the US isn't like Europe where there's like basically 6 banks that control everything, okay? We still have a very decentralized, I guess, banking system where there is lots of different banks. There's tons. There used to be more back in 2008, but then there was some consolidation in the market. This is likely going to be another event that causes more consolidation as well. But right now, banks that aren't in the top 20 still make up a significant portion of what supports our economy. And I think the Fed is starting to realize that this could be a huge problem as we're starting to see headlines like this, where U.S. Treasury Yellen says that they should start discussing changes to FDIC deposit insurance. The Treasury is ready to collaborate with lawmakers. This means that they're starting to say, okay, maybe 250,000 coverage when we think there could be more collapses isn't enough. And I think this is also sending the market some warning signs that the Fed's probably seeing something that's concerning them and they're trying to get ahead of it. Now, what does this mean for the actual market? Last week, I went over a bullish thesis that was gaining popularity across the social medias, just kind of iterate like this is one of the conversations that's going on. However, I think it misled some people to believe that right now I am particularly bullish on the market, and I'm not. I still think that within 6 months, we're going to see a pretty significant crash in the market. I don't think that we're going to have a soft landing. I've never been in the soft landing camp. I've been toying with the idea, always trying to be critical of my own ideas and theses. And, you know, at the end of the day, letting price action dictate to me how I make my trades. And I'll just say it right now, this year has also been one of my best years. And so if you're actually curious about my process and what's been leading to that, you can actually go on the Discord, go down to resources, and here in trade rules, I've actually written up some of my rules for trading that have allowed me to have that profitable success, even in pretty difficult market environments like this one. But enough boasting. Let's actually look at the charts and see what they're telling us. If we look at the S&P, we can see that we had this meltdown to this trend line. It looks like the market is trying to bounce into tomorrow. We can see the TTM squeeze is also turning over, telling us that in the short term, we could see a small bounce, but overall with the RSI this low, with the amount of weakness we saw, with the amount of speculation that's likely to come in the future, I think that we are about to see this market get even crazier and potentially have a visit to 380. If we take a look at the VIX, we can see that we also had a bounce above that 22 level. If you remember, above 22, bears are in control. And in fact, I think VIX is pretty suppressed right now, especially with how this index actually works. There's a different index you can use that you can actually Google or look up. It's called the MOVE Index, and it's offered by Bank of America. It's a different type of product that you can look up to measure the volatility in the market right now. And if you look at that one, it's at new highs right now. So I think that the VIX isn't telling the full story here. And there's actually more volatility in this market than some traders might be led to believe. And I think MOVE Index is actually what most hedge funds use as well. That's actually why I know about it. A hedge fund told me about it, that's what they use. So that's why I say that. But I think that this market could get even crazier. Now, the one star child here is actually Bitcoin, which has already had a quick recovery from the sell-off today. And in fact, I still think is headed for our target of 31K. We saw the bounce come in. If we look at this looks stronger than SPY already. If we look at the 5-minute, we can see that we're actually at a bullish RSI, and I think this could melt up into the end of the week, which is especially interesting because of what happened with Coin. The SEC sent them a letter saying that they are likely breaking securities laws and are probably going to get a fine. Now, this led to this sell-off on the stock, which I think is over-exaggerated, like most of these are. Most of these fines, most lawsuits end up being nothing. They just end up being great buying opportunities. I am looking at this very carefully, looking for an opportunity to buy at Coinbase, especially when I'm so bullish on Bitcoin. I mentioned this on last week's report. I probably should have talked about it more on YouTube because I was posting about it a ton on the socials, and I think I only spoke about it for like maybe 10 seconds tops. But we are in a third wave on Bitcoin. It's usually the strongest wave. We can see we've had a slight pullback in the wave, which is pretty normal for a third wave. I still think that we're going to be a magnet towards this 31,000 level before we get a small pullback on the fourth wave and then another fifth wave to the upside where we even tried to get close to 40K on Bitcoin. So I'm still bullish here, and I'm looking at this pullback on Coinbase saying, okay, are they going to completely ban Bitcoin? We've seen some rumors about that, and maybe they do, especially with all the banking concerns. However, I think small crypto coins are going to suffer the most here, because if the Federal Reserve starts to see these perform extremely well, they might take it as a threat towards their monopoly on printing money, and they can't have that. But now I want to end this report talking about my star child, my baby, my outperformer, my alpha, and that is SYM Symbotic. This company has just performed on fundamentals, excelled. It has not cared at all about what the Fed is doing, about what's going on with the banks, none of that. This company has simply killed it. It's done nothing but go up since I put the report in the Discord. By the way, in case you weren't aware, I do these long form reports sometimes in the Discord when I see something that has my attention. This company is an AI and robotics stock, which, hey, the market loves those, right? But unlike most AI companies, which don't make money from actual services they provide, there's almost no money in that. Think about this like the gold rush, right? And I think we've talked about this. NVIDIA and AMD will be the big winners from that because they make the hardware, and the actual services side won't make much. And that's because services tend to just become commoditized eventually, where it's just a free service you have. Spotify, mostly free for most of you. If you do want to pay, it's a low monthly subscription, right? That's likely what's happened with most AI projects. However, this company has incorporated their patents on their software with the patents on their hardware to help service what's been going on with the supply shortages and helping warehouses. Now, the big thing here is the deals that they have with Walmart and also the first and third largest grocery chains, which is C&S Groceries and Albertsons. And they are leveraging this to help these companies save a ton of money. I mean, it's actually a pretty incredible deal. These companies spend about $15 million to invest, and then they end up saving $10 million in savings per year with an estimated shelf life of 25 years. Okay, so you're spending $15 million to save $250 million. Is that math right? That math is right. What an incredible deal. Now, the company's only making about $1 billion right now in revenue, which isn't a lot at all, but they do have a $12 billion backlog, which shows you that what's going on here is likely some constraints on their manufacturing and implementation. So there's an execution issue here. However, when you start to go through what's going on with the company, how much cash they have enough cash to last the next 18 months. They have great partnerships that will likely market themselves because Walmart is such a trend leader when it comes to the type of businesses that they're going to want to work with. They'll see that who's Walmart's working with. That'll make it easier for them to then get more partners in the future. So the sole thing that this company has to focus on is just that manufacturing and execution on implementation, and that's it. And I love that it's the only sole focus that they have right now. It means that we have a one target in mind. We can focus everything on that, and dipping into that $12 billion backlog will make this company's earnings multiply rapidly over the next few years. And I think people are starting to go in to recognize that this company is pretty much headed for a very exponential growth right now, and that's likely to expand as people start to adopt more AI and robotics into their supply chains. So I'm very bullish on this company for the next few years. I think this stock could double in just a few years, maybe even just in a year. When I bought it, it was around $16, had a $25 target. It's already achieved almost $22. I had a short-term target of 25, so I still see some room in the short term. And in the longer term, I think this stock could easily double from where it's at. We're at just under a $10 billion market cap. I think a company that, has 12 billion potential just in its backlog, has plenty of growth ahead of it. And I think that that could really bring about some more money into its evaluation. And this is still kind of a low key stock, and it's a low key stock while still being a sector leader. This is still the leader in its sector. So I think this is a great pick. This will probably be a big winner for me for the rest of the year. And I mean, for the time being, this is one of my largest positions right now. And remember, if you want to be in tune to when I think I've stumbled upon one of these great plays or know these option trades when I make them and not in the aftermath of when they're up 200%, the Discord is going to be the place to be. Just remember that none of this is supposed to be financial advice. It's for entertainment and educational purposes. See this as an opportunity to shadow a trader, someone who's actually profitable, knows what they're doing, that being me, and seeing what that's like. What does that actually look like? This is basically you being able to look into my personal notes and my trading log so that you can see how things are going. And as well, you can still use all the resources and the free education that exists in the Discord. Remember, I do not sell courses. I will never sell courses. I will, however, always answer your questions for free and make content like this to help you, because I think that that's what's important. Anyways, that's going to be it for this video.